Okay, it's a few minutes after 1, so we'll go ahead and get started. Thank you for joining us. Happy Friday, everyone. Today we will be presenting on Banner Finance, HR, and a payroll and year-end close. Just a few quick reminders. The chat window is available if you have any questions during the presentation. We'll review all of those at the very end. So if you could just hold until then, that would be great. Please keep your microphone on mute. And we will be sending out the webinar probably sometime next week, and it will also be on our Ferrilli page if you need to see that in the future. Today's presenters, first and foremost, Grace Hill, one of our senior Banner consultants with an extensive history with Banner, 20 years finance experience. Thank you, Grace. And then Brenda, one of our other senior Banner consultants, has 30 years of HR payroll experience and 25 years of higher education Banner experience.
Thank you very much for that introduction. For those of you who are attending, I'd also like to thank you for your time and attention, especially on a Friday. And I want to tell you a little bit about what this session outcome will be. Brenda and I will be providing an overview of Banner Finance and HR payroll year end. This overview is really perfectly timed because it's here to facilitate a deeper understanding of how taking certain steps on a monthly basis will definitely ensure a successful outcome as you move forward towards your year-end close. Typically, we should be looking at doing some similar processes at the end of each month, because we find that if we clean up on a month-by-month basis, by the time we get to that 12th period where we're trying to close, it's going to be a lot more efficient and a lot easier to do. So typically what I like to recommend for my clients is that you look at these tasks that should be repetitive throughout your fiscal year, but these are processes that you can run on a month-end close. Of course, I do not have to read verbatim over the slides, but what I do want you to take and pay attention to establishing and adhering a month-end schedule. Whether you do it a week into the following month or truly at month end, that would be up to you, your procedures, but you always want to make sure that you're taking care of any incomplete documents that don't linger. As well, you know, Banner will encumber a document once the focal element and dollar amount is there, whether it is incomplete or whether it is complete. So at the very least, to help facilitate a cleaner budget, do check for those incomplete documents and determine what steps need to be taken to either complete them or remove them from the system. You can run your PO batch close process on $0 as well, you know, on that parameter, or perhaps you do not. There is a parameter that says max amount before you close. You always want to have that set to 0, because at this point, we're just closing $0 purchase orders. There's some pushback saying, oh, but we have standing orders. Sometimes the departments are a little remiss in doing change orders to increase them. That's all right. It becomes part of a process. If one is closed that should not have been closed, it is a small matter to go to the open close encumbrance form and reopen that purchase order so that they can then do the amendment and increase that purchase order. So taking care of these duties, making sure that they are documented so that departments know at what point in time these things will happen, will help minimize that year-end crunch when you try to clean everything up at the same time. Once again, you're going to see some daily reports. You know, as a finance person, these reports were literally ran daily. Why? Because we want to keep our ledgers in control. We want to make sure they're in balance. And if we have any out of balance conditions, the sooner you find them, the easier it's going to be for you to correct them. Resolve, if you're using receiving, that's the three-way match process that Banner has. Please, please, please try and resolve those unmatched issues. You can actually go in and do a report, pull it out, see what POs are waiting on receivers, see what invoices are waiting on receivers, and clean that up so that we'll have a nice, clean, at least we know from month to month that these things are being matched and paid in a timely fashion. If you're using approval queues, all right, you do that soft month-end close. Believe me, I'm not advocating actually a hard close where you can't do any transactions within that period that's closing, but you're doing everything except closing that out. I do have some clients that are really on it and they'll shut that period down. Whether or not you do that process, it's important that you roll those things that are sitting in your approval queues from period to period. This makes sure that if you do decide to shut down a period, you won't have documents trapped in your approval queue in a period that's been shut down. So there's a very simple process where you can roll documents from period to period so that nothing gets shut down in case you do a hard close. You also want to look at any AR student jobs that come in monthly. Make sure you clean those up. Some clients may have a hard practice of only running things like student refunds every other week, once a month. If you're trying to do a soft close for a month-end close, then you'll also want to reach out to your student AR folk. Make sure they're aware that you have the schedule set, and it would be very helpful if we could just run through as many as we can so we could get a close to that month end as possible for balancing and financial feed processing. There's quarterly cleanup. Now I'm talking about every quarter. So if you're going to do quarterly cleanup, it is so important that you at least run your open encumbrance report. Why? Because this will give you an idea of those things that have kind of slipped through the cracks, and we want to take care of them. They don't necessarily have to be incomplete to be open. They could be sitting out there. Maybe they've got an amendment on it that hasn't been completed. There are a lot of little things that can happen that will kind of put a speed bump in a process if we come to it at the point of we're trying to close everything down, roll things forward, and make sure everything's in balance. So it becomes, kind of important that at least quarterly, you go out and you do these run your open encumbrance report. And this is going to look for any encumbrance that is still open. Review those, take care of them, work with accounts payable. If you need receiving, if you're doing a three-way match and receiving's a little behind, reach out to those departments, try and get things done. Once again, you can use a batch close process, or you can use an encumbrance open close process for outstanding purchase orders. You know the functionality of both. One, batch close, it's going to close hundreds, thousands at a time. That's why you want to be careful when you use it. When you set it up and you say close everything that's a zero, in a matter of 60 seconds, it will close everything that's a zero. It's a very smart report. It will not close anything that has an outstanding invoice or a change order that hasn't been completed. It will consider those still waiting to be processed. So it'll give you a list that tells you these are the things I can't close, these are the things I can close, but it's a huge batch process and it closes thousands at a time if that's what is selected. Your individual encumbrance open close, that's a one at a time process. So I like to use it for cleaning up. If I've closed something in a month and I should not have, I can go and open it again. But to close down one by one is very laborious, but you certainly have a choice to use either one. You just want to make sure you're careful, and you want to make sure it's all zeros. I will state I like using that report to look for $1, $2, because I can change that minimum close amount and then make an informed decision on whether or not I want to close these as well. When you're executing your year-end close soft close, and the reason I'm dividing these up is because these are things you should be doing every single month. There is no month in Banner where you shouldn't be preparing for that final month for your year-end close. It's nice to get together, to have deadlines, to have dates, to discuss this throughout all of the modules, and then do these jobs that affect you monthly, quarterly, soft year-end close. During this period, and of course, I threw the month of June out there because about 90% of Banner clients do close at June. But regardless of what month is your last month, if it's May, if it's August, in this case, I've got June there, you now have the ability, since you've set up times to cut things off, no more new purchase orders, no change orders after this point, you have the ability to start working in a concurrent year processing. It's very convenient because it allows you to open up the first period of your new year. Banner, being calendar smart, knows that anything that comes in that first month of your new year, if I were to use an example to justify this slide, it would be July 1, that's going to go in my new year. If it's June 30th, I'm keeping that in my old year. By opening up that first period, you are now allowing work to continue. You can have your purchasing department still create purchase orders for what? Your new year, by just making sure that rec has a July 1 date on it that you pull in. You can have POs that have been rolled forward because you've kind of started things going. And if in fact that's happened and you're doing concurrent year processing, Banner will roll that back into the old year if you get an invoice with a June 30th or earlier date. It is very efficient to use a concurrent year processing because it allows you to keep an even flow of work. You don't have a backlog waiting for a certain date before you now put in 10 to 12 hours a day to try and facilitate catch up. You can have an even flow of work that can be providing information in both periods. You can load your budgets. You can do your weekly cleanups. Believe me, at this point, when you're close to June and you're getting ready to clean up, you want to run those batch reports. You want to review those open encumbrance reports, because truly at some point in the very near future, this will not be a soft close any longer. This will be a hard close, and you will be running those processes that will really begin your beginning balance and set you up for your new fiscal year. Once again, if in fact you are using Banner's multiple fund balance functionality, then you want to make sure you check that form and you make sure that you have some place for all of those dollars to liquidate. You can fill that form out by fund type or by fund, just depending on how you want that to liquidate. But you do have an option, instead of having it liquidate to just one account, to separate that out into different accounts. If that is your option, please, please, please check out that multiple fund balance form before you run the process. If there is just one missing and Banner cannot find where to move it, that job will abend. So you do want to make sure that everything is set up and ready to go. Once again, we're looking at these calendar days. Now, because we're kind of doing a soft close, we're really going to be talking to those feeder modules, those modules that feed information into Banner and finance so that all of our books are as complete as possible for that year-end financial report. So as I've stated, you would get together with the other departments, student AR, even student. Why? Because at some point, we're going to have a cutoff. We're going to have a shutdown. IT needs to be involved in this as well. You're going to be having some hard cutoff deadlines that everyone will have to adhere to in order for all things to come together. So it's good to have all these things kind of hammered out, have a schedule, make sure that schedule is shared. Banner is a shared ERP. All the different modules feed into one another. So it's good to have everyone's input in these processes. And even though Banner's going to handle, finance is going to handle the actual close, it involves the entire institution. So everyone needs to be at the round table discussing these cutoff periods, the timing, and the best way to move forward. Okay? I'm going to stop now, and I'm going to defer to Brenda, who is going to walk us through some extremely important processes that support this financial year-end close process.
Great, thank you. As Grace noted, there's steps monthly and quarterly, but there's also steps that we need to do for the soft year-end close. And those processes do involve human resources. And in some cases, we're responsible. So before we begin talking and walking through those steps within Banner HR, I wanted to take an opportunity to discuss how does Banner HR fit in this whole finance fiscal year-end soft close process at a very high level. So during the fiscal year-end process, or any budget process for that matter, we on the HR side within Banner HR have labor and fringes, and we've been working on them and keeping them up to date in our system. And so also we hold all the detail position budgets, the detail on the fringes, the detail on any of the salaries, and also the detail as it relates to the accounting, or FOPL is a term that you're familiar with on the HR side. So in the next few slide decks, I'm going to walk through some of the steps that talk about how do we move our information from the labor and fringe side and all those budget amounts over to the Banner Finance budget module. So I wanted to discuss a few things as well. Is why is this important? Grace touched upon fiscal year and periods, but I want to relate this as from an HR perspective. So within Banner HR, there's fiscal financial periods such as January, February, March. And when we in Banner HR feed over payroll transactions to finance, or even prepare to send our salary budget to the new fiscal year with salary increases, the fiscal year is set up in Banner Finance, but also on our side, because it tells the system when we are sending our transactions over to the Banner Finance side, what period of time do I need to post this information? Because this allows the finance folks to use our data to help with reporting and capturing the institutional financials, but at the same time work in the future so that we can start building our new budgets for the next fiscal year. So there's several tasks that we need to complete. Now, I did have this checklist, and this checklist is found on customer support, and it's very helpful to have. I also have quite a few checklists as well. The reason why I'm bringing this up is I strongly encourage you to look at your checklists, because you want to make sure you're capturing not only the steps that you're taking, but also how to determine, after I run this process, how do I know it's correct? Or what do I do if I get these errors? What are some of my steps that I need to do? I can certainly help you through that process, but that is something that I find that we all have checklists, but we only do this once a year.
Hmm.
And when something does not go right, it does not go right. So I always encourage you, before you start your process on the HR side, bring up your checklist, take a look at it, make sure you understand what steps you're going to do this year, and maybe some steps that you're going to skip over because you're changing your business process. So again, just a reminder, go back and look at your checklist or documentation. If you don't have any, I'll gladly provide you some information, and we'll kind of work through getting you a more comprehensive list if needed. So now we get to the part when we start talking about the actual steps. There's a lot of mixed responsibilities within the fiscal year-end process on the HR side. Grace has already alluded to creating a fiscal year. So that's one of the first things that needs to happen, is the fiscal year needs to be created for the new year, as well as budget IDs and phases. So this is something on the finance side. And once those budget ID and phases are created, they typically help identify what type of information we're sending over to finance. So for instance, your phase might be a labor phase and your ID might be the fiscal year. Once those two criteria are completed, we then start moving into the actual steps within Banner HR. And we know that it's HR because a lot of these forms and pages start with the letter N or the letter P. So one of the things that we need to do on our side is we need to create our very own fiscal year. And it's on a page called NBA Fisc. But one of the things you need to make sure is that you do not check that box, because we're still working on it. We're not active. We just need to create that, but we do not check that it's active. Then we need to go to another page that basically is the HR and finance interface rules, and it's on NTR Finney. And we need to do a step and copy the old fiscal year to the new year. And on this page is very important if you plan to send over any of your salary budgets to finance. There's a box that you need to check that basically says you want to send this information over to the finance budget development system. Also, we encourage you to take a look at these rules. These rules basically tell the system, when we feed any information over from HR to finance, how do we want it to post? So when we are sending over payroll data, there's some rule class codes that tell it how to post over in finance. When we send over budget information or encumbering information, these rule class codes determine how it gets fed over to finance. I encourage you to look at this. If you are going to make any major changes to your NTR Finney, I strongly encourage you, you reach out either to us or to others and other colleagues to discuss that, because that would change quite a few things. In addition to that, you have an optional rule form. This is where we get into, when we roll our budget, we get to say to the system, we want to take either the current salary or the current job salary and roll that to this new fiscal year coming up. And we call that term working status. We're going to roll your existing positions to something called a working status on the position. And when you roll, you have an opportunity to create a rule to blanket an across the board increase. So let's say you wanted a 3% increase on your whole salary budget. You can build that into this particular page, and the process would do that for you. It is optional because some customers, which I'll talk to you a little bit later, like to use Salary Planner and some other tools to manage that part of the increase. Another thing to consider, you need to step back and look at your fringes. How do we plan to budget fringes? Do we even want to budget fringes within Banner HR? And if you do, you have two choices. Either you can budget by a percentage base, meaning all of the fringes are going to be budgeted at 30%, or you can do it by actuals, and actuals meaning just that. You can budget based on how many people have elected family coverage, single coverage, and so forth. This is optional. This is always a conversation to have with your finance and budget area about how HR is going to fit into your fringe budgeting. Then I have some other steps that are not necessarily fiscal year end, but they're good practice. You should always look at your benefit labor distributions overrides. And the reason for that is you might have set up new benefits for the upcoming fiscal year, or you might have to change how things are being funded due to grants for one fiscal year versus another. So I always encourage you to go and look at your benefit labor overrides on a rule form called a rule form PTR BDCA. In addition to that, we have this high level installation rule form, and there's some finance interface criteria, very high level, of basically asking you, how do you want to feed transactions over to finance? I always encourage you to take a look at that. And if there needs to be any changes, if not, you just move on. But it's just something to kind of recenter yourself, go back to making sure that you didn't have to make any changes. It's always good practice to set up your calendar for the whole year. So I know some organizations do create calendars a couple years in advance, but again, it's just a reminder. And then also we have to take a look at some of these other rules about how do we want the system to manage the budget when we start running some processes. So for instance, when you run a process to take your active positions into this term called working, meaning you're actually moving it to the new fiscal year, you need to look at your positions and say, okay, I only wanted to pull the active and the frozen because that's what Banner will do. And so this is an opportunity for you to clean up your positions. So if you have any canceled positions or positions you know you're not going to use, go ahead and start setting them to that status, because you don't want to bring them over to the new fiscal year part of the planning if they're not going to be moving forward. Also, you want to take a step back and figure out, how do we want this role to work? How do we want the salary budgets to move to the new year? Do I want the system to use the current budget that's listed on the position on the HR side? Or do I want it to go out and look at maybe the current annual salary or some other methods? So again, it's one of these steps that you want to take a look at, make sure everything is set up before you go on to the next part. So this is where we start getting into a section that's primarily within HR, and it's the salary tables. And one of the reasons why, there's several, but one of the reasons why we need to update our salary tables is the salary group is one of the parameters when creating the working budget. And it also is used to look at midpoints in order to determine whether what the new proposed budget's amount. So it has some impact. So when I talk about salary structure, what I'm talking about is in HR, we have various rules that basically tell the system what grades we have, what steps we have, and what is our low, mid, and high. So think about this. If you are increasing your, giving everyone a 3% increase, we also need to update the salary structure. That is what all these processes are doing for you. You're going to establish the new fiscal year for your salary table. You're going to have a couple of choices. Either you can go manually and update them one by one, or you can use a rule form and basically tell the system that you would like to update the salary structure by a percentage or even a dollar amount. And then you run a process, you look at this process, and if it looks great, you go ahead and run it again to apply it to Banner admin. It is strongly encouraged you do this. I do know that some organizations sometimes don't roll if they do not have if they don't have an increase. And we still encourage you to roll, but roll with like a 0%. That's perfectly fine to do that. It does a lot of other things when you roll and keep all of your salary tables in sync with your fiscal year. It also allows you to do some reporting, and you can do some comparisons against salary structures. So again, it's one of these things that if you currently do not follow this process, you can turn it on at any time. And if you don't have an increase, we certainly can roll a 0% or a $0 amount if your salary tables are not changing. So now we get into the actual process. So we have looked at our positions, we've cleaned them up, we have all of the ones that we want active, we have all the ones that should be canceled, and some are frozen because we're not really sure we're going to have the budget for them. Then we need to start talking about actually running a process. And there's a process within Banner HR, and it's called the budget roll process. You'll hear the terminology, it's Banner language, but we will say, did you run the B-roll process in working status? And what we mean by that is, have you taken your old fiscal year positions, ran this process to move them to the new fiscal year, and the actual status on those positions say working? And the reason why it says working is because during this time when you roll, you always want to look at your list and log file. You must look at them, because if there's error message, it's going to be on that. If you skip over that, the system sometimes will let you move forward, but you might have some positions left behind. So it's step one, always review your listed log file. In addition to that, once you roll into a working status, this is where finance, budget, department heads, HR, we're all working together because we need to figure out what is going to be the budget for the new fiscal year. And you can do a couple of things. Once your budgets are in that phase, in that status, you can manually go to the position budget, NBAP budget, and I can change Grace's position from 50,000 to 60,000. I can do it manually. Or I could utilize self-service salary planner as another tool to help me manage my whole entering of the budgets for the new fiscal year. So again, this is a period of time where there's a lot of collaboration on getting the working budgets where they need to be. I do want to take some time to talk about salary planner. And how does that fit into the year-end process? So in this diagram, you would have your active fiscal year, in this case is 2021. When you run that process to move your positions in what we call working status, you run that process and all of your positions are sitting there in that the appropriate status called working for 2022. You have a couple of options. You could go directly to that position and start making your changes. The budget office or HR or payroll or finance can go to NBAP Bud, which is a position form, and start making your changes. Or you could have used that optional rule form and did it across the board and had everything have a 3% increase. The other option is using Salary Planner Self-Service. Salary Planner Self-Service, what this does, it extracts the data, the working positions out of Banner Admin and puts it into self-service. And it allows you, the budget administrator or HR payroll, to complete them through self-service by using a couple of options. There's copy features. You can also even download a spreadsheet, make your changes to the spreadsheet through Salary Planner and upload that back into Salary Planner. You can also do global job changes. So if you know you're going to give Grace 60,000, you could also do a future increase for her job record. The other thing I like about this is within Salary Planner, if you make a change on NBA PBUD, which is your position in the focal line, you always have to go back to the job record and make that same change. But if you use Salary Planner, there's a button or a check mark that helps you keep those two in sync, so that if you make a focal change, you can have that come through on the job record as well. There's also features that we are integrated with Banner Self-Service Finance in the budget area, so that our Salary Planner information can get included into Self-Service Finance. At the end of the day, once you're all done making your changes within Salary Planner, You can then run a process, and that process takes all that information and uploads that into Banner Admin. Another benefit of Salary Planner is there's some organizations that have very complex budgeting. And sometimes they like to push out, let's say, Excel documents to certain deans because they need them just to plug in certain information. You can do that in Salary Planner. You can decentralize some of your salary budget tasks. And what you're doing is you're just pushing it out to that department head. They're completing their workbook and worksheets. And then in turn, the master salary planner can load every department into one, and they can give their blessing, make their changes, and then load that all into Banner Admin. So at the end of the day, Salary Planner allows you some flexibility for you to utilize some tools with the downloading a spreadsheet and also just automatically going into Banner Admin after running a process. So there's some other things that you can use Salary Planner for. It's great to use after you have your positions approved. You can use it for reporting, meaning you can pull down all your active positions, active jobs, and there's many other things that you can do. So we're going to go on to the next slide. So once we have our positions in a working status, we need to talk about, do we want to send all that information over to Banner Budget Development, which is on the finance side? So anytime you make a change to a position called NBAP Bud, it creates a to be posted amount. And that to be posted amount is what the system is looking at when we run some processes to feed over. There should be a lot of discussion about that to be posted amount, because when you run certain processes, it doesn't distinguish whether it's for the new year or the old year. And so when you look at your notes, I strongly encourage you to determine whether or not you have to clear out your to be posted amounts before you complete the following steps. And I'll gladly help with any questions if needed. But if you are going to feed your working budgets over to finance, we need to run a fringe chargeback process. And again, that's the percentage-based one. And it's called NBP bottom is what we call it. And what it's doing is it's calculating that percentage amount, and then it's loading it to the positions. If you are not doing the fringe chargeback percentage method, you would skip over that process. But the next couple of processes allows us to pull all that information by running a process called NHP Fin 1. And then what it does, it populates it to a table called GRFeed. Many folks on the finance side have at least heard the word GRFeed table before. A lot of things go into that table. But when we put our information in, it has a header called pause and control, or pause and budget, that will allow you to distinguish that these are the budget entries that are going to move over to budget development. Once it's in that table called GRFeed, you're going to run another process that sweeps it out of there, and it gets ready for it to be fed over to the finance module by running, I'm going to use some Banner language, FiberFeed, and then FurFeed, and TrinR, and then the posting. So there's like these finance processes that actually get that data over. Once we have that data over, that's where Grace comes into play, and she's working her budget with the finance folks. And it's going to be a little limbo here, because we in HR are just waiting for someone to say, hey, Brenda, we need to make changes on a couple of positions, or we need to make this change, or we're good to go. What changes we were fed over is what we're going with. So there's a lot of back and forth here, and a lot of communication between Banner finance folks and the Banner HR team. But one thing we want to remember, that once we get the A-OK, so finance or budget is going to tell us, yes, Brenda, those positions are looking great. We need to run another process that takes those working position statuses, flips them to active, turns on the new fiscal year, and guess what? It closes out the old fiscal year automatically by running this process. So that's why there's a timing of this. You always want to roll to approve after your last payroll of the current fiscal year and prior to the first payroll in the new fiscal year. So there's a lot of timing that comes into play. And I recognize that you might have payrolls that you might have weekly payrolls, bi-weekly, semi. There needs to be some conversation with finance about when we perform that task. This is not something we should do whenever on our own. We need to work very closely with our finance. And the other thing we have to talk about is you always want to make sure that your new fiscal year is active. Because just because you run that process, you should always double check. You want to go back and look at NBA Fisc, the fiscal year on the HR side. We want to make sure that box is now checked that the new fiscal year is active. Also, we want to go to that interface rule form and we want to make sure we see the new fiscal year and we see that it's checked as well. Because when we see those two checkbox, we know that we're good to go. Now, these two other topics are not necessarily part of fiscal year end, but they kind of can be. So I like to include them because it may be at your organization that your salary changes or COLA or across the board or merit increases are done that are coincide with your fiscal year. And if that is the case, Banner has some options for you. You can use a rule page to build out those increases. You can say all of these groups of position classes and salary groups get this percentage or this dollar amount. And you can run a process and it will mass update all of your job records. Or you can use Salary Planner, which I showed earlier, where you could actually go and extract all of that job information and do those same increases through Salary Planner. And in turn, Salary Planner can then be loaded into Banner Admin. So do know that you might have a salary process that happens after you are successfully in the new fiscal year. You might also have an extra step. Also, if you're encumbering, I do want to point out that you need to be mindful that there are steps that you need to perform to liquidate the amounts of the prior fiscal year. So when you're talking about the rolling, you might have steps that talk about encumbering. If that's what your institution is doing, you need to liquidate the prior fiscal year. And then after you approve the new fiscal year, you may have a step in your business process that creates the new the new encumbrance amounts, in which they should be created prior to running the first payroll. Once you've done all of this, HR is done. We've done our task and the fiscal year is now active, and we then carry on by running payroll. And at this point, I'm going to pass this over to Grace.
Thank you, Brenda. I appreciate that very detailed overview for our audience. Now, I'm going to take you through a process setup for the actual year-end close process. No more soft close, no more quarterly, no more monthly. This is where the rubber hits the road, all right? You need to understand what those parameters mean that you set up on FTM COAS. When you look at those parameter windows, I'd like for you to think about what those mean. It's very likely that you weren't the one that made the decision, that these were set up long ago and you just use them. You have other things you work out on the backside, but for now, you're just kind of going along with what the parameters are listing. Okay, you've got the fund balance account, and that account is used for those closing entries. On one of the previous slides, I talked about multiple fund balance, and I said you have two options at fiscal year end close. You can just use the fund balance account that would be included on the parameters of FTM COAS, or you could literally set up the multiple fund balance, which says, no, if there's something left over on this fund, I want it to liquidate here, I want this one to liquidate there. When you use that multiple fund balance, you must have a place for every fund to liquidate. So it can be a bit to build up the first time, but once it's there, due to the hierarchical roll-up of your chart, everything should sync up Well, unless you're doing it fund by fund. If you're doing it by fund type, it'll be a lot easier. If for some reason, perhaps the structure of your chart or some particular funds you want to move around, then you would have to do it fund by fund. You'll have an accounts payable accrual account, and this is actually used if cash is dispersed in the accrual period, because you do have the option to, once all of your 12 periods are closed, you can open up, Banner will open up that accrual period. And this is the account that's going to operate in that accrual period for your accounts payable. You also have an accrual period for your accounts receivable, so that it knows during this year-end close, I'm operating in the accrual period, and these are the accounts that I'll be using. You'll have the J001 code, and that's your close the GL ledger code. This tells the system the rule code that you're actually going to use to close your ledger. These fields that I just went over appear as the first section of parameters on FTM-COAS. You'll have your fund balance, you'll have your accounts receivable accrual, you'll have your accounts payable accrual, and of course, you'll be saying to the system that I am going to close my general ledger using this rule code J001. Once again, if you're using multiple fund balance, it's quite all right to have that fund balance field be blank. I've even seen the accrual accounts are blank. Why? Because some clients just never open the accrual period. They'll run that year-end close process. They'll keep period 12 open, and they'll be processing concurrently. And when they finish with their concurrent processing, they just shut everything down. They're good to go. There's no reason to operate in the accrual period. This is a personal preference of the institution. Then you're going to come to that second section of your parameter window. And that section is actually going to say, what am I going to do with my encumbrances? How do I define that? If I am going to roll these encumbrance forward, I'm going to be using this rule code E090. This is a very special rule code, and it's used because it's a hard-working code. It does multiple things besides rolling forward. It really equates what the original amount was, the remaining balance, and it's only going to roll forward the remaining balance. It's going to go back and it's going to shut down that purchase order, that encumbrance that it's tied to. It's going to shut that down in that current year, and it's actually going to open it up in the new year. It's going to post the new fiscal year as this PO is in the new fiscal year now. And then it's going to provide the remaining balance to continue to be used in the new fiscal year. So it's not just your typical EO32 or EO35, I'm closing or adjusting. It's really doing quite a bit of work. So it's important that you use this particular rule code, E090. Once again, we're going to look at an entry on the encumbrance part that says, how do you want to leave these rolled encumbrances? Do you want them to roll committed, or do you want them to roll uncommitted? They mean two extremely different things. All encumbrances are created in an uncommitted type. And what that tells Banner is when I'm using this purchase order, if I had it set up for, $200 and the bill came in for $195, I'm going to do this as a final. I'm going to liquidate. I'm going to expense that $95. That $5 will liquidate and go back to the budget, the original FOPO from whence it was encumbered. Okay. It just means that I get to use that budget again. I was a little off, or maybe there was a discount. And if there's money left over, it liquidates and it goes back to that department's budget, that FOPO that was used. That line directs it to where it returns. You have the option at the point of rolling forward, and this is the only time you have the option to change that commitment type to committed. If you determine that you want to change that commitment type to committed, Banner will still roll forward those encumbrances that you've selected to roll forward. It will place them in the new fiscal year. It will only be showing the amount of money that was remaining on there. But what happens is when you get that invoice in, and you might have rolled forward 200, that invoice came in for 195. Banner's going to pay that invoice as a final, it's going to close it, but it is not going to liquidate that $5. It's going to close that purchase order with that $5 tied to it. So it doesn't go back to the department's budget. It is committed to that PO. And if you're not going to use it on that PO, Banner says, then you won't be using this. All right. The other thing you want to remember when you change a PO from uncommitted to committed is now you're locking that down for a 2-year roll. You can roll that purchase order forward for 2 consecutive years. And then after that, Banner's like, hey, really? You haven't used this committed money yet? I'm sorry, we're not going to roll it forward any further. So you want to be very mindful if you determine that you want to change that commitment type from uncommitted to committed, because remember, all encumbrances are created in committed status, in uncommitted status. You have one opportunity and one opportunity only to change that to committed status, and that is at the point of your fiscal year-end roll. You're also going to be looking at that budget roll type. This is a field that you say, am I going to be rolling that budget? If the committed type is C, then the field must be yes. If you're leaving it uncommitted, then Banner says you can say yes or you can say no, which simply means it's going to reside in your committed type. It's not going to be counted as part of your budget. So it's not like we're beefing up your budget. I'm going to roll them and then I'm just going to, close them down and liquidate that money back to my budget. If you said, no, don't put this back to the budget, it just remains in the committed type. In essence, you do get to use it, but you don't actually see it inflating your budget. Once again, there's a budget disposition, which is specifically saying what's going to happen to my remaining budget. And it's guided on whether you decided to change that commitment type from uncommitted to commitment. Okay, you don't have a choice. If you change it to commitment, then that budget is going to be yes. I have to take the budget with me and I'm locking it down right here on this purchase order. Okay. A lot of talk about budget disposition. Is it restricted in any remaining amount that you're going to be liquidating of that committed amount? Is there going to be a fund balance? Is there a posting modifier tied to this? As you know, Banner comes with what we call rules that guide how every page in Banner functions. Every page in Banner has a rule tied to it, and depending upon the code that's associated with that rule, it tells Banner how to liquidate that money, what to do with it, where it's going to go. And so if you tie a posting modifier to one of those, which means for some reason you didn't like that setup, you've got a special fund and it needs to move over here, you need to be cognizant of that, but that carries all the way through. So when you're thinking something's going to liquidate and you're saying, hey, why isn't it there? You might want to make sure that you don't have a posting modifier tied to it that's actually pulling that budget somewhere else. Very, very important to remember that when you're doing your multiple fund balance as well. If the encumbrance are being rolled committed, you can specify no action in the budget disposition field. As with a restricted, any remaining budget will not be available for use in the current year for committed. I can't stress that enough, because if you decide you want to do that, you need to understand that it's going to restrict it to that purchase order, and you will not be able to play with that in your new fiscal year. The percentage amount at the end of the field just allows you to specify a portion of the budget to roll with the encumbrance. However, the percentage must be 100% when the encumbrances are rolled. What? Committed. A lot of rules tied to committed. When you say 100%, I don't want you to think it's going to start all over again with that original budget. It's going to roll forward 100% of that remaining budget. So everything that we were talking about on those past 2 pages fits in this encumbrance parameter roll. Now, also what I want you to know is you have the ability to do some overrides in that next area when we talk about what type of funding, when we talk about restricted, unrestricted. In this sense, I'm talking about grant money, where it's not tied to a fiscal year, it's actually restricted money. The parameters that we're looking at right now in FTM COAS, these are universal settings, which means I set them up here and it's going to affect everything across Banner. But there are overrides that we'll be talking about that are done at the fund type that will allow you to say, regardless of what the universal setting is, I really do want to override and bring my restricted budget forward. So when you talk about the fund type maintenance page, we're actually talking about what kind of budget are we going to carry forward in parameters. They're going to be using the budget carry forward rule code, which is J020. These rule codes are not negotiable. The rule codes that you're looking at on these slides are what Banner delivers, and these are the rule codes that you will need to use in order for your fiscal year-end close to run smoothly. Now, if I have someone in the group who's done some custom work and we've got some modifications, I'm excluding you from this process. If you are using baseline Banner, then you don't have wiggle room. The rule codes that I'm giving you, the definitions to what they mean, are exactly as you're seeing on this slide. If you're looking for budget types to carry forward, because Banner's going to say, well, what kind of budget type do you want to carry forward? Temporary, permanent, original, adjusted. These budget types are defined by the budget rule codes that you use. BDO1 is, of course, your original budget. But you do adjustments to your original budgets using BDO2. BDO3, that's your temporary budget, but that's your grant money. Okay, so you have the ability to tell Banner exactly what combination of budget you want to roll forward, if in fact you are rolling forward budget. If you set this up and at the end of the day, you say the percentage I want to roll forward is 0, Banner's really not going to take any budget forward. But once again, that is on the universal setting. If you go to the fund type page, you are able to then override that by saying, except for my 21, let's say 21 is my state grant, except for fund type 21. I'm going to hit an override on that page because I want all of my state grant money to come forward. I don't want to have to do a journal in the new fiscal year to move money from year to year when I can have Banner do it in the matter of 60 seconds. So it looks like this in that particular section. I'm telling it the rule code. I'm telling it I want to take my permanent and any adjusted budget to my permanent budget. And I want to do it at a 0%. Why? Because we know we've got some unrestricted money in here and we can't be rolling unrestricted money forward. We're setting it up like this. So literally this would not roll anything. But if I went to my fund type page and I set up overrides, then I can say bring 100% of this budget, forward. Now I get to pick and choose what kind of budget rolls forward. But this setup on my universal setting will stop any budget from rolling forward. It is my fund type pages that I go to where I can create overrides to roll different types of budget forward. The last section on your parameter page asks the system, well, what type of documents would I be rolling forward? Okay. And sometimes it's confusing, especially because I've checked encumbrances and purchase orders. Banner has a process called the encumbrance page, and it actually creates encumbrance documents that can be used to pay for things. The encumbrance document does not require a vendor. So a lot of times it's used for things like projects or travel. Maybe I'm sending someone to a conference and I don't have a travel and expense module, and I just want to say, Brenda's going, it's going to be $1,500. And here's the encumbrance. What it does is it encumbers that money so she's not going to get in trouble with her budget. And then as she gets her airline ticket, she submits a invoice for that airline ticket with that E number on it, that encumbrance number on it. It goes ahead and it pays. The difference between an encumbrance and a purchase order must be tied to a single vendor. Can't have multiple vendors on a purchase order. If I cut it, to Delta, I'm paying Delta. I can't pay Delta and Hilton and, the restaurant. An encumbrance, I'm just setting a lump of money out there. I'm tying it to a function that someone is doing, and I'm encumbering that money from the account that's going to be used for that travel. And then I'm just bleeding away. I can switch vendors at any point in time. It is not the same thing as a purchase order. People say, I've got them both checked because I want the encumbrance part of that purchase order. That's not really the logic. The encumbrance is its own vehicle for payment. The purchase order is another vehicle for payment. So these are typically the two things that most clients will roll forward. If they're not using the encumbrance process, then it is very typical only to see purchase orders checked down there, because purchase orders are the only thing that they want to roll forward. Banner, however, does say you have the option to roll these other things forward as well. You want to verify that on FEMSTAT, you actually have the correct parameters set up to actually work your fiscal year end processes. These are actual parameter setups that are done at the table level. For those of you who are familiar with Banner and you're looking at the second character that says B, we're talking table level. We're telling the system that we've created these system IDs that will tell the system, this is a budget roll forward, this is an encumbrance roll forward, this is my general close parameters, because all of these rules have parameters tied to them, okay? And this is my encumbrance roll forward parameters. You would set this up on FTMS stat, your system maintenance. This is where all the Banner parameters reside. All those parameters that tells Banner how to work and what to move and what not to move and ignore, they're built out on FTMS stat. With that stated, this is not a form that everyone should have. This is a form that is a closed form. One or two people, probably on the accounting side, set this up when things started going. And truly, once it's set up, you don't have to go back there. It could have been IT set it up and you don't have to go back there. But I do want you to understand what this means. These codes here are telling the system how to bring that in. I want to bring it in detail, D, and guess what? If there's something wrong on it, instead of rejecting it and rolling it back, I want you to suspend it, which means I'm going to walk it into Banner and I'm going to put it in I status, because I'd rather on the finance side research it, fix it there, and then complete it, then send it all the way back through the system, go and find it on a spreadsheet, pull it out there, take my chances of rolling it in again. This last code is telling the system for those encumbrance roll forward, these are all BD1s, original budget for what is remaining on those encumbrances that have rolled forward. Once you've made sure that all of the inner workings, all of the parameters that are going to track and drive that process forward are set up correctly. And, you know, I was a user for many years. And even though I know they were set up correctly, I had set them up years ago. I still went and looked every year. Why? Because it was my responsibility to make sure those things were going to close appropriately. There is a year-end ledger maintenance page that you need to go to. And this system really allows you to set up your calendar, your date of when things are going. It gives you the ability to name things, how you want to name them, and set up when this is going to roll forward. It actually gives it a date of when it's going to roll forward. Because Banner also lets you have multiple charts of accounts, okay? You might not know this, but you run everything, but everything does not close together. You're going to run them one at a time to close down those charts, all right? But you're scheduling all of your processes on the calendar. Your first process, of course, that's your general ledger. What does that do? That brings forward your beginning balance, and it will open up your accrual period if you've closed all 12 periods. You can roll without closing all 12 periods. The second process, open encumbrance forward into the new year. The third process is just bringing in any remaining budget, because remember, I didn't want all my budget, but I might have gone into my pages, my fund type pages, and rolled my restricted money, my grant money, my federal funded money that I can use because it's not tied to a fiscal year, it's tied to this contract. If it's a 3-year grant, I've got this money, I might want to just roll that forward year after year, because if you're using Banner's grant process, it actually will let you do from inception to date. They don't care about what fiscal year it is. On the grant side, it just says, when do you want to start looking? When do you want to stop looking? So there are all kinds of things that work well if you're using all of Banner processes. So that's the remaining budget. The fourth process closes all the operating control accounts. Control accounts actually keep Banner in balance. I have many clients that never run the fourth process. We call it clomp. They never run the close. And typically that's because they don't want to bother with the fund balance setup, with tying where all this money is going to go. So when they look and they see it, it's just not all swimming in the same pool. They just will, you know, kind of have an idea on that control account side of what was going through the books. My concern here when you don't do that is that your control accounts are cumulative. If you don't close them, or you don't have a process to go in and liquidate them, because many clients create this little SQL script that does that, then you're going to see not only last year's balances, but this year's balances. What I'm saying is it's cumulative, it will grow. If you don't close it, it doesn't liquidate, and it can become more difficult to resolve out of balance issues when you're looking at totals from 3-4 years. So if you don't close that, you might consider a process to at least liquidate those control accounts so that you're starting from scratch. The fifth process, of course, you're rolling your HR labor. These are the things that Brenda talked about. It can be run anytime after the last day of the old fiscal year, It is not dependent on other banner finance years, but don't forget rolling it and making it active are two separate things. We're just talking about when you can roll it in. This process will close the current labor encumbrance in the current fiscal year, roll forward, open multiple fiscal years, labor encumbrances, and then close those encumbrances in the new year. Now, Brenda did state you have to talk to finance because you want to do this after your last payroll of your old year or the legacy year that you're in, but before the first payroll of your new fiscal year. Once again, I cannot tell you or express how important it is that you collaborate, that nothing is done in a silo, and that you collaborate with all the departments in order to have a successful fiscal year end close. So, because, you know, everybody, if everyone does their job, believe me, the heavy lift is not too bad. All right. So just once again, some of the steps are listed out here. You're going to get together, you're going to schedule these processes, you're going to talk openly about it at the day that you're doing year end. The reason IT is going to stop in, anything that is on Atomic or an auto scheduler, or if you're receiving payments through a website, you want to lock that door, you want to close it down, because we are trying to get a snapshot of money in time. So as we do this final year in close, we still can't have processes running in Atomic that are going to sweep things over from AR, financial aid, payments coming in from the web. So it is so important that we all get together and we all do it right. The one important thing I want to tell you about this maintenance calendar, you can schedule it for any time when you're doing your year-end close, but Banner locks you into that time. Let's say I put 6:30 here, but 6:30 is a Sunday and I decide I want to do it on the 28th. When I try and do it, Banner's going to say, sorry, it's not time yet. You said you're going to do it 6:30. So please be mindful that Banner keeps you honest. When you create this calendar and you say, I'm going to do my balance forward, once again, labor does not have to go in at the same time. It can go in on its own. It's going to say, what date are you going to schedule this? I don't have to do it. I mean, I can do it any time after the 30th, but it's going to hold me to doing it on the 30th. Please, please, please run your control reports. You should be doing this. If you're not doing it every day, tell me you're doing it monthly, because any out of balance conditions will show up on these control reports and you'll be able to clean those up. If you clean them up in the month that it happens, it is so much easier to find and reconcile. If you wait till the end of the year to try and go through out of balance conditions that happen at the beginning of your year, you can imagine how tedious and laborious that will become. So these control reports are extremely important. Run them daily, run them weekly, but please, please, at least on a monthly basis, run those. Do your cleanup before you do your fiscal year end. You've told Banner you're going to bring forward purchase orders. You don't need to bring forward purchase orders with no dollars. Go out there and do your zero balance close, all right? Run your depreciation. If you're using Banner's fixed asset, run your depreciation. If you're not, make sure you've got that journal voucher ready and load your depreciation into Banner. The last day of the month, once again, I've avoided too. Those things that are running automatically, stop them, shut them down. You can do a full backup of your system in case you have the big oops. Especially if it's your first time, if that makes you comfortable, I'm all about making this a comfortable, less stress, seamless process. Once again, verify that your prior and current year records exist. I've had clients go through this whole process and said, no, I don't see anything in my new year. Well, they did create the new year, but they forgot to open the first period. If you create the new year and you don't open the first period, it's like, you know, Banner walked the stuff to the house, knocked on the door, no one let it in. Now you're going to have to redo this again. Of course, if you're using concurrent year processing, that first period was open sometime in June so that you can continue that flow of work. Depending on how you want to handle that, whether you're going to keep period 12 open, which is, you know, a lot of clients do, or whether you're going to close period 12 and force the accrual period open. All of that information is up to you. Those accrual accounts are loaded onto the parameters of your page, FTMCOAS, so it'll know exactly how to work and use those. Executing these forward, you're always going to want to run your GRT BAL report, and you're going to run that as of the last day of your fiscal year. In this example, it was 6/30. The last day of the fiscal year, I run that report. I run it. I can run it in audit, but before I do the actual roll forward, I'm going to run that FGRT BAL in update. I'm going to save that report. Why? Because once I actually roll my beginning balance forward and it's in my new fiscal year, I am going to run that FGRT BAL report as of 7/1. I am going to look at it. It should match that FGRT BAL report that I ran for the last month, the last day of the month of that old fiscal year should match the first day of my new fiscal year month. Here, boom, I've got an exact match. These dollars tie out. I know that my beginning balance and my roll forward is correct. And I have hard, fast documentation of that. That's the easiest way I'd like to recommend you to validate your roll forward went correctly. Once again, it depends on whether or not you're going to use the accrual period or not, but it certainly is up to you. We can have a rousing discussion on what's the best way to do. Why should I use concurrent year processing? But due to time limits and so many debates that we can have, what I want to give you is what I consider to be best practice. Years and years of working with Banner clients, helping them with their fiscal year end and providing them an efficient and effective method. Concurrent year processing has always been a very helpful process for them. Once again, after you've done your FGRT BAL for the new year and it matches the old year, you're going to check your maintenance calendar. It's going to actually have a date there that says, oh, I rolled forward and as of this date, you know, I'm all set. And then you know you can go on to the next process. Some individuals will not go back and check that calendar, and then they roll the next process and nothing's there and they get all excited. And I say, did you check to see if it completed? No, waste of time. Well, now we're going to consider that because you've been wasting time trying to figure out why these things did not roll forward, okay? You're going to roll your encumbrances forward. Once again, typically you're only rolling forward purchase orders, or maybe you're doing encumbrances as well, but all of those POs, that is your second job, will come into the system, and now you've got purchase orders there. If you've left the 12th period open, this is when you will actually be able to do that concurrent year processing, and it will actually roll things back and forth for you. If you get an invoice that should have been paid in the old year, you know, it's pre the first day of your new year and your PO's already sitting there. When you go to your FAAINVE to do that, when you go to pay that invoice and you put in June 30th date, it'll go roll that purchase order back, put it in old year, and let you take care of everything in that year where the goods and services were actually received. This is just reviewing how these tie back to the actual control forms, the processes that you would go through, your close process, which actually liquidates your control accounts. Now, one thing I want to say about that, Many of my clients have created control accounts and they are not data enterable, non-data enterable. Why? Because we don't want anyone creating a journal to feed these accounts. We want Banner only to feed these accounts so that it keeps things in control. Many of my clients have a cute little script they run at year end that changes all the non-datable intro no to datable intro yes. Go ahead and do close and then run the script to close them again. And then again, the other half of my clients don't do this process. So it would truly be up to you to determine what you want, okay? After these processes, I am telling you, there is that interface process. We can't forget that trend R. We want to make sure that everything is set, everything is in there, that we've looked at all of our processes, and you're looking at them now, all of the processes that roll forward, including the HR position control process. And once we do that, you have successfully closed your fiscal year in. What I can tell you is, if you work on this every month, if you do due diligence and you do your monthly, your quarterly, your soft close processes, if you communicate with all of the modules and set a schedule and adhere to that, then you will have a successful and a less stressful year-end close. And of course, if you need any kind of assistance or help, that is why Ferrilli is here. This would be the perfect time for any questions that the audience may have.
If you feel like coming off mute or posting in the chat, feel free to ask the questions. And yes, we will be sharing the recording.
I do understand it's a lot. This was quite a bit, okay? There's a lot that goes on with this. So I do understand that you're probably digesting now. What I'd like to state is, if you think of something later, please reach out, send an email, be more than happy to do some follow-up. If you think you would like a little deeper dive, into maybe some consulting help, maybe a refresher or an overview. I tell everyone that year-end is something that happens every year, but here's the grab. It's once a year. That's why I like to get clients, used to going through these processes monthly, quarterly, with a soft close, so that they're not so foreign to you, that it doesn't take you as long to embrace and understand what they're actually doing for you.
Grace's point, if you have any follow-up questions or want to inquire with Ferrilli in the future, please feel free to reach out to info@ferrilli.com. Otherwise, you can go to our What's Happening page and has our upcoming webinars, any conferences we might be attending, and just general information that we post about Ferrilli in the industry.